oh, I'm going to buy it for $11 a share, about $96 billion. They could have pulled off the acquisition. He could have bought it all cash, wouldn't have had to issue any debt with it. Well, this weekend has absolutely revolved around the great Warren Buffett. And why is that? Well, Warren Buffett released his annual shareholder letter, which, by the way, I did a highlights video of the most important things I saw in that shareholder letter. Basically, I posted that on my other channel, Financial Education 2. But when that letter comes out, it is like Warren Buffett time. Everybody's talking about Warren Buffett. What did Warren Buffett have to say? He does a lot of interviews, which have happened today. One being which he did on CNBC. I can't show you any of the video clips because I'm sure I will get demonetized if I do that. But I want to talk about three very specific things he said in that interview today. One being around the Kraft Heinz, one being around Apple and his Apple stake. We know Apple's actually his biggest holding now at this point in time. And also he mentioned that they almost made a massive acquisition. We're going to kind of talk about what he could have bought. So first off here, let's look and see what Buffett has to say about Apple. He says, if it were cheaper, we would be buying it. We aren't buying it here, Buffett says in an interview on Squawk Box with co-host Becky. Buffett says he hasn't added to his Apple position despite a recent sell-off, but would buy more stock if it cheapens further. As I previously mentioned, Apple is by far and away Berkshire Hathaway's biggest public company holding at this point in time. And in my personal opinion, you know, Buffett started buying Apple somewhere around $100 a share. This was about 2.5 years ago, somewhere around the $100 share range. And so in my opinion, Warren Buffett would love to buy some more Apple at something under 150. In my personal opinion, he's kind of looking for Apple around 150 or under, based upon where he kept buying up to. And then when he stopped buying, it was somewhere around $150, it seemed like. So if we look at the chart on Apple, it only dipped under 150 very, very briefly, and then it bounced straight back. And now obviously it's in the 170s again, around $175 here today. So in my opinion, unless Apple drops under $150, like to the 140 range, 130, and especially 120, unless it drops to those ranges and kind of stays there for a bit, I don't see necessarily Warren Buffett buying any more Apple shares in the short term. I think really it's got to fall under 150 to get him to say, okay, now let's start loading up the boat again on Apple shares, because I think he absolutely does want to buy more. I think Charlie Munger, his investing partner, wants to buy more Apple. He's stated that in the past, that they've been way too controlled with buying Apple, which is crazy because of how many Apple shares they have. They have around 250 million Apple shares, which is another reason I don't think he's necessarily desperate to buy Apple, because he got such a massive position in his company. 250 million shares. Let's do the calculation on that, okay? 250 million shares times $175 a pop. That's almost $44 billion in just Apple shares Berkshire Hathaway, Warren Buffett's company, has right now, okay? Almost $44 billion. Like, that is ridiculous, okay? As far as Apple and paying them out in dividends, Apple should be upping their dividend here within the next few months. And based upon what, in my opinion, Apple will probably up that dividend to, and based upon how many shares Berkshire Hathaway owns, in my opinion, Warren Buffett and Berkshire Hathaway will probably get around $1 billion per year paid out to them just in dividends from Apple. Never mind in future years, that should just be starting in 2019 into 2020. I think they'll be getting around $1 billion just in dividend money, guys. Like, that is nuts, okay? That is nuts, all right? Next up here, let's talk about the whole Kraft Heinz deal. Obviously, I did a video on this channel recently about this, and everybody wants to know, what does Warren Buffett have to say about this? And he says, I was wrong in a couple of ways about Kraft Heinz, Buffett tells CNBC. We overpaid for Kraft. It's still a wonderful business in that it uses about $7 billion of tangible assets and earns $6 billion pre-tax on that, Buffett tells CNBC. But we and certain predecessors, we paid $100 billion in tangible assets. So for us, it has to earn $107 billion, not just the $7 billion that the business employs. But Buffett says he has no intention of selling his stake in the company. So I absolutely love the fact that Warren Buffett is not shy about saying, hey, we overpaid for that. So I feel like some hedge fund managers, some fund managers out there, when they make a big mistake, and by the way, a lot of those hedge fund managers will lose a lot bigger percentages of money than Warren Buffett is down in the Heinz position, okay? Let's be very clear about that. But a lot of times they'll just try to brush it off or try to like make a big excuse. Buffett's just being flat out honest here. He's saying we overpaid for Kraft Heinz. That's the bottom line. He says he likes the business, likes all this and that, but the bottom line is they overpaid, and that's another reason, you know, I love Warren Buffett, not just because he's gotten amazing returns throughout his life. I think somewhere around 19% on average compounded per year, which is ridiculous, right? When we're talking about, you know, 5-6 decades of doing this. But the fact fact that he's just man enough to own up and say, we made a mistake. We overpaid for this. I love that about Warren Buffett because that's something you just don't see out there from a lot of fund managers. And I think Warren Buffett's just built up that credibility over time that he can admit a mistake and move on. Whereas some other like hedge fund managers and whatnot, they're afraid to admit they made a mistake because they're afraid, somebody, one of their big high net worth clients will pull out money or something like that. I just love that about Warren Buffett. He said, hey, we made a mistake. We overpaid for it, all right? The other thing Warren Buffett said that was very interesting to me in that whole like hour-long interview, or it might have been over an hour. It was a very long interview they did on CNBC. But he says they were close to making a very large acquisition in the fourth quarter. Warren Buffett says he was close to making a big acquisition in the fourth quarter, but it fell apart. Buffett says he doesn't think the deal is on the table any longer, but does not say why not. When they obviously pressured him, try to give us a hint or something, Buffett said, I'll give you a hint. It's on this planet. That's typical Warren Buffett. And so I kind of got to thinking, like maybe what are a couple companies that Warren Buffett might be interested in buying the 100% of, as far as public companies go. And there were two that kind of came to mind. The one that kind of made the most sense was a company he used to be invested in, and that's General Electric. He used to have an investment in General Electric many, many years ago before the business fell apart and whatnot. And this is a company, as of today, has a $96 billion market cap. By the way, Berkshire Hathaway has well over $100 billion just in cash sitting around right now, okay? Now, think about this. A couple months ago in the November, December timeframe, GE basically had fallen to like $8 a share, $7 a share, meaning that General Electric was selling for, let's say, somewhere around a whole market cap of 60 billion, maybe 70 billion. So maybe at that point in time, maybe Buffett made an offer out there to buy GE for maybe somewhere around $11 a share at that time. Once again, GE was around $7-8. Say, oh, I'm going to buy it for $11 a share, about 96 billion. They could have pulled off the acquisition. He could have bought it all cash, wouldn't have had to issue any debt with it. And I think at that time, maybe a lot of shareholders would have said, yeah, let's go with that. That would have been a huge premium at that point in time. And not only would it have been a huge premium at that time, but let's keep in mind, General Electric was just going down and down and down and down in stock price. So at that time, shareholders might have been like, okay, we can get $11 per share, $10 per share, or maybe $12 per share, and Buffett's going to buy out the company. Let's just let him buy out the company and take our losses and just run with them. Or if we happen to make some money, let's just take those and agree with it. So that's a possibility. We don't know for sure. It just kind of makes sense that it could have been, and for the deal to fall apart, well, obviously General Electric stock has been up and up and up, and now if Buffett wanted to pull off a deal, he might need to pay $14 a share or $15 per share, which means that might put General Electric's market cap somewhere around 120, 130, maybe 140 billion. Now it gets too expensive, okay? The other possibility is another general company, okay? Another company he has investments in and he understands very well. He could be interested in possibly buying GM, or maybe was interested in buying General Motors. General Motors trades at about a $57 billion market cap. By the way, something I forgot to mention when I was actually recording the video is if you think Warren Buffett's not very interested in General Motors, think again. He already owns over 70 million shares of General Motors. Many of those shares have been added within the past year or two, so he's very interested in General Motors. Let's put it that way. Obviously, a very low forward PE on this company. It could have been something maybe Buffett was interested in buying. I think that's one a little more of a long shot. I think General Electric probably would have made a little more sense. And also, it might not have been a public company at all. It could honestly been a private company that they were talking about buying. Obviously, Buffett loves to buy 100% ownership stakes in a lot of private companies out there. So maybe it could have been a private company. We just don't know, guys. But I think there's a good possibility it could have been General Electric based upon where General Electric was trading at in that November, December. He's talking about it could have closed in the fourth quarter. Look where General Electric was trading at in November, December, and think about the premium he could have paid. That one probably makes the most sense. So anyways, hope you guys enjoyed this. As always, let me know your opinion down there in that comment section. As always, thank you for watching. Have a great day. And by the way, just today, the public account hit a new all-time high of just a little under $220,000 here today. You can see all the trades I place in that account by being part of my private stock market membership group. You'll also want to join there if you're a newer investor, because there are hundreds of videos to learn from that will accelerate your learning at a massive, massive rate. I actually have a little discount for you since you stayed around to the end of the video. And then if you're a more advanced investor, I think it's also a group you would very much enjoy being part of, especially now that we have the Discord chat and we can talk about stocks and things that are happening in the market and whatnot. So if you're interested in joining in there, I would love to have you in there. And then also the 200 plus members that are in there would love to have you in there as well.